Good morning, clients and friends. This is Craig Llewellyn from U.S. Investors International. It's my pleasure to give you an economic and market update this morning. As you know, the markets have struggled in here this week. Up to this point, they're off about a little over 4% for the week. Today, we're getting a little bit of rebound. We'll see what happens from here. But today, I just want to give you a brief economic and market update and then discuss some proactive guidance moving forward as we go into the rest of the second quarter and into the third quarter. Before we begin, though, it's always important to review there are 5 areas of financial planning that we like to look at. That's preservation planning, retirement planning, tax planning, estate planning, and investment planning. As a comprehensive financial firm, we try to always consider the impact of any recommendation we make on not just one, but all of these areas for you. Today's presentation, we're really going to focus on investment planning and the equity markets. And it's here we really want to, this is really important to us, knowledge is power. Making you educated makes you our best clients. And we always try our best to help you when it comes to your finances. We just really believe that knowledge is power. And so one of our missions here is share with you any knowledge that can help you make good informed decisions. So let's look back to the start of 2020. We had a very unusual ride that year. On February 19th, 2020, the Standard & Poor's S&P 500 index closed at an all-time high. And then sadly, without any warning, when COVID first became a worldwide pandemic, investors saw a 30-plus day decline of over 33%, which finally reached bottom on March 23rd, 2020. But for those who did not panic and stayed in the market, good news arrived on August 18th, as the S&P index rallied to a new all-time high. Then we fast forward to April of 2021, and the index, despite the volatility gain, made new highs. And as of early May, we've also made some more new highs. So this week, again, we've been struggling in here. So I just want to give you a quick market update. It's important to remember where we're at here, and the markets are high. Remember our goals and our risks, and we'll talk about that here in a minute. Interest rates. I've been talking to many of you about interest rates over the last few weeks, really all year, but heavily again in the last few weeks. We've been starting our second quarter reviews. They continue to be our main focus of our watch list. With the vaccinations being distributed, the economy on the rebound, the Federal Reserve offering an improved economic forecast during its March 2020 monetary policy meeting. Despite the predicted upward trend in the economy and inflation, majority of the Fed Policy Committee members remain steadfast to keeping their federal funds rate at or near 0% that they moved to in March of 2020. They're saying now that they're going to keep them there until 2024 before they anticipate any rate hikes, noting the Fed needed substantial further progress toward employment numbers and price stability before they could raise rates. And that's really the key here. That's one of the reasons why the market has been going through a rough patch here, as suddenly inflation is raising its head. The Feds believe that this is going to be short-term as we go into the last quarter of the year. They believe this will come back down. We'll see. We'll see. There's an argument out there. But that safety comes with a cost, and this is really important. Interest rates, money market rates, they matter to the market. When your interest rates, if you've seen these interest rates, if you've looked at your bank statements lately, you'll see that they're very, very low. In fact, according to Barron's, the average bank money market rate on April 19th, 2021, they were 0.07%, and the average 12-month CD rate was 0.18%. So at a rate of 0.18% without taxes, it would take over 350 years to double your money. I don't want to live that long, but at that rate, we're not going to reach our goals in money markets and CDs. And really, that's why the market's hitting these highs like they are, is money. And when they try to come off like they do, money comes flying back in because it starts chasing dividend yields and more value. So markets love low interest rates. And as long as the Feds are going to keep this position, I think we'll continue to see, as markets get to these levels, higher levels, we'll see more volatility. They also become much more vulnerable to geopolitical events. The second reason the markets got rattled this week was the pipeline issue and the gas prices going up because of it. These are things we can't see coming. And we talk a lot about this. And I talked a lot about it in 2019. And then we got something in early 2020. Here we are again, 2021. Markets are back to all-time highs. We have the same problem, geopolitical events. But again, with the Federal Reserve doing nothing, keeping rates low like this, it just becomes a buying opportunity. In the last quarter, many investors became distracted. The media magnification is a powerful force. Sensational headlines can leave investors overwhelmed, stressed, and confused. I've talked a lot about this over the years. The more stressed you get, the more bad news you hear, the more you get in tune with your TV. Especially in recessions, when I get people to turn off their televisions, it's amazing how their mindset changes. When things go bad, this is the time, stay away from all of it, because it can just drive you crazy mentally. And our objective here is to help you carefully create and follow a strategy with realistic financial goals. So if you veer off course in the hopes of short-term gains, it could potentially compromise the financial fortitude of your long-term goals. So we're going to constantly talk to you about this, and when markets get rattled, we're going to constantly come at you. We're watching this very closely. Your personal health is imperative, and stress doesn't help that, and we want to try and keep that down. We want you to try to stay as healthy as you can. Time horizon. This is a big deal. We talked a lot about this. A lot of people have been calling me. One of the things that happens when we get into markets like this that get hot and go to new highs like this is people start looking at their savings account and they think, well, it's not earning anything. Maybe we should go and try to make some more money in the next year or two. We want to remember what your time horizon is, and we want to remember why we have cash on the sideline. It's your emergency funds. And emergency funds can be for vacations, for cars that break down, for roofs that need to be repaired, for paint jobs on the house, plumbing breaks. Because Murphy's Law says the time that those happens is the time we don't want to take money out of the market. So remember your time horizon, remember your risk level, remember why we have those cash positions where they're at. This is an essential factor when selecting the types of investments to include in your portfolio is your time horizon. This is the amount of time you earmark to reach your goals. So an investor that can commit to a 10-year time horizon can review different choices as compared to someone who needs to use that money in 6 months. Have these conversations here in the last 2 days. Somebody needs money in a year or 2 years. I know you're not earning anything in a money market, but when markets at all-time high, you know that old adage, buy high, sell low. When markets are reaching all-time highs, to say that you should put your money in there and get a quick return over a year, I'm not going to do it. In fact, I'm telling you just the opposite. Money in money markets are there for a reason. It's cheap insurance. You have money in the markets, you're participating in that. Your money in the money markets, that's why we review that with you every time we see you, making sure those are proper and building them up so you have those emergency funds for things that come up. So you should always try to match your goals with the time horizons. This can help you keep the big picture in mind and hopefully curtail any distractions caused by short-term developments. This is something we really enjoy helping you with. If you are focused on their long-term goals, we can help manage any anxieties caused by short-term market noise or volatility, as our goal is to help clients avoid making impulsive investing decisions. Another key factor, again, is that you can control is your risk appetite, or the amount of acceptance that you have for risk. We want to emphasize the importance of keeping your focus on what you can control versus what you cannot. As this illustration shares, you can control your risk, your time horizon, and your behavior. Although many of you focus on outcome or investment return, this is something we cannot control. We don't know what tomorrow's going to bring, but we certainly can control what your risk level is and what your time horizon is. And we come back to this every time, especially when markets go down. And when markets go up and they stay high like this, we have to keep coming back to this and remind you. Because it's easy, again, to get in that media frenzy where we think we're missing something. We're seeing that in the digital currencies, cryptocurrencies, and that sort of thing. Please be very, very careful here. I have a lot of concerns going forward with that. A lot of concerns, and I could spend an hour on it. I've talked to a lot of you about it already. And so and I'm getting calls on it. Should we do it? That's another sign of a topping pattern. You might make more money on it here, but remember, it's a very speculative thing. Please be careful. So again, reviewing your risk appetite to see if it has shifted or checking to see if your time horizon has changed is always important. So after you fully outline or update these two foundations for your investment strategy, you can then match your behavior to your investment plan. I just can't stress this enough. And we've been talking about this a lot. We've been talking about a lot here in just the last few weeks, and we will continue to talk about this. And thinking long-term is still a great way to look at equity investments. Typically, the most successful investors think and act long-term. People that ride through this with me and don't pay attention to this, we have all good quality. The difference between our investments and cryptocurrency is there's something there. There's something behind there. We have good equities, good dividends. That makes a difference when times get bad, because those will rebound. So it's just nearly impossible to predict the exact market movements, but we certainly can be prepared. So equity market is still present. It was going to be here. I think it's going to grow. Equity market downturns and declines are a normal part of investment experience. Again, I've talked to this a lot about this. I've talked about this in prior videos. Even in strong markets, we get a couple of 5% to 10% correction. They will happen. It will happen. But again, with the Feds with rates low, we just see that as buying time. So now is an excellent time to move forward with confidence in the path that you've chosen toward your investment goals. But just remember, equity markets are currently high, and we always alert clients that we need to proceed with caution. And we've been doing that heavily here, especially since the beginning of the year. Tax planning, watching this too, we've been talking to you a lot about not only tax planning, but estate planning. It's going to be hot on our button here as we move into the last part of this year and probably into next year. As recently Joe Biden has said that he was going to recommend some changes to the tax rates and laws. While nothing is currently approved and they're debating heavily on this, it's something we're watching very closely, and we'll keep you updated and informed as things progress. I think so far I've told everybody we're really going to be focused on that in September to see where we're at. I've been collecting everybody's tax returns. We've been looking at beneficiaries, and we want to make sure we have all your estate planning docs in order on file. And if you don't, we've got a lot of people in the pipeline getting those completed. And if I haven't talked to you about it, we need to talk about it. So as we move forward here, it's going to be really important. The Secure Act that was passed in late 2019, it changed how retirement funds were transferred to heirs. So to try to offer you better flexibility on minimizing taxes and on your retirement funds, we'll be discussing with you, where appropriate, the strategies that come with designing both primary and contingent beneficiaries. Again, we've been having some pretty good discussions on that. We will continue to do that. Another proactive planning topic we want to be watching is that of Senator Bernie Sanders, who filed a Senate proposal called the 499.5% Act. This proposal was to reduce estate tax exemptions from the current level of $11.7 million per person to $3.5 million per person. The estate tax rate under Senator Sanders' plan would start at 45% and grow to as high as 65%. This is a proposal we will be watching very closely as things develop, and we'll be updating you and talking with you about how it could affect you. It could affect more people than we realize. So just to recap here, some key points. Again, despite the continued volatility equity markets in 2021, they certainly have started on a high note. We're expecting interest rates to stay low for the foreseeable future. The Feds have said till 2024. We'll see. Is inflation here for good, or is it not? We'll know that by the fourth quarter. The economic recovery is still largely based on vaccine distributions and reduction of COVID-19 cases. We see that right here in Oregon and Washington. And of course, the new administration always brings changes and proposals. Key takeaways, caution and vigilance are really critical here. Please avoid distractions that sway you from the path to your goals. Right now, those distractions are when we get to markets like this, and we've seen this so many times. People start thinking they're missing out on things and they try to jump on board in the next great thing. Please be careful. Markets are high. Focus and make sure your time horizon and risk appetite are congruent with your goals. And as always, call us with any of your concerns, but we'll continue to be talking to you about this as we meet with you going forward. As Charlie Munger said, I love this. Charlie Munger is a legendary long-term investor, Warren Buffett's business partner. It's waiting that helps you as an investor, and a lot of people just can't stand to wait. It's time. This is a game of patience, and it's time for us to have a lot of patience. Don't chase things. There'll be more value tomorrow. There'll be other ways to make money tomorrow. Don't chase things at their all-time highs like this. And as always, what you can expect from us, our main focus is to review changes with you and on an ongoing basis to keep you updated when markets get goofy. I want to continue to come to you and let you know what we see. Right now, I think everything's fine, but we're going to see more volatility and we'll see more geopolitical events. You can expect regular communications from us, more frequent discussions that we've been having, we'll continue to have. You can expect that we are continuously reviewing all these economic, tax, and state and investment issues for you, especially this year, very, very closely. We'll be on top of this and bring it to you as soon as we know anything for sure. All it is right now is hearsay. So as I've told a lot of you in the meetings, I don't want devil's in the details until we see the ink on that law becomes law. It's just hearsay. So we'll be offering other workshops that highlight these tax changes and planning ideas. I can't wait till we get back to that and we get to offer these face-to-face again. We're also going to, we're hoping to do a appreciation event. First one we've done a long time, hopefully get back to it. And to kick it off, hoping to do the Portland Zoo in August. We've got that scheduled. It looks promising at this point as the state of Oregon is opening things back up. So stay tuned on that. That will be, and I think we're planning on being close to the polar bear exhibit right there. So look forward to that. Look forward to seeing as many people as we can. I don't know if there'll be restrictions on how many people we can have at that point, or if things will be back to somewhat normal. So stay tuned on that. We hope that to be our first main get together again. It will be a great way to kick it off. With that, we appreciate you very much. As a benefit, you can add names to our distribution list for doing this workshop. We hope you'll take advantage of this and add 2 names or more to our list, and they can get these workshops and the economic reports and such as well. We can help them. One of our goals for 2021 is to continue to help other people. So some of our best clients referred to us by you. So please feel comfortable letting us know the names of anyone you feel could benefit from our service or information. And again, one of our primary goals is to keep you informed, and we appreciate you watching our update. Please call us with any concerns and have a great day. What a beautiful, this is Thursday, May 13th. What a beautiful day. The rest of the weekend is going to be beautiful. So make it a super one, and we will catch up to you soon.